Guys, if your friends who joined evening and not here, please just let them know. Okay, they might not be, no? So let's start, guys. So guys, we have to start from current assets, right? We say current assets, these are assets which will generate future benefits within or less than one financial year. Guys, you're going to get the benefit less than 12 months. That means within 12 months, you will get the benefit, not more than 12 months. So what we studied, what's a stock? Guys, stocks are goods. And what are the other names for stocks? Can you all just send me the answers? What are the other names we call stock as? Yes, please. Soon send me the answers. Very good. We say trade good, inventory. Guys, for stocks, we either say trade good or we say inventory. Guys, stocks are our main purpose good. Why did we start the business? We started the business, let's say, to sell maybe books. So our stock is books. If we have started a business to sell phones, then our stock is phones. So like that, guys, what is the main purpose you started the business? That is your stock. And then, guys, what is a trade receivable? Can you all tell me another name for trade receivable? What is the other name for trade receivable? Debtor. Very good. We say debtor. Debtor. Guys, how is trade receivable created? Now see here, you make a sale. You make a sale to customer. When you make a credit sale, guys, credit sale means you tell the customer you can give the money later. You sell the goods now and the customer will pay you the money later. We call it credit sales. Okay, that's what I'm going to tell you. Who are debtors? Guys, debtors are people, once you make credit sales is, for example, Huda, let's say I am the business. Okay, I'm selling goods to you. So when I sell goods to you, you say, listen, I don't have money now. I'll pay you the money later. You tell me. So when you tell me that, for me as a business, it's called a credit sale because I didn't get the money when I sold the goods. So because of that, Huda is my customer. So guys, I have sold goods on credit to the customer. So because of that, we call Huda as the debtor. She is becoming my debtor because she has to pay me the money later. Guys, debtors are assets. What asset? Current asset, because I will tell Huda to pay me within 1 month. I will tell Huda to pay me within 1 month. So we call them debtor. So remember, guys, easy way to remember. Remember, debtors are created due to what? A credit sale. Credit sale is where you sell goods and ask the customer to pay the money later. So, but you will tell him to pay within 12 months, okay? Usually 2 weeks, 1 month. You don't tell to pay after 12 months. That's never going to happen because, guys, you need money to run the business, right? So that's why we say it will give you benefits within 12 months because once Huda pay me in the future, it's a benefit for me. Okay, so that's why it's coming under current asset because I will get the benefit within 12 months. Okay, then the next one, prepayments. What are prepayments? Guys, prepayment is where you have already paid the money even though you didn't actually incur the expense. For example, let's say next year electricity, you already paid in the current year. Okay, next year electricity expense, you already paid in the current year itself. Guys, tell me, can you use electricity next year without paying? Now, if you go to next year, can you use electricity without paying money? Yes or no? Soon tell me, everyone. I'll repeat the question again. Okay, you have to pay electricity 1,000 rupees. Next year electricity is 1,000. But you already paid this year. So my question is, should you pay again next year? But can you use electricity next year? But can you use electricity next year? Yes, right? Because you already paid. Guys, you already paid electricity this year, so you don't have to pay again next year. I'll repeat what I told again. Okay, I told that next year electricity is 1,000 rupees. Next year electricity you already paid this year. So guys, next year you don't have to pay electricity expense again. But still you can use electricity because you already paid. We call it prepayment. Prepayment. Guys, is it a benefit for you or a loss for you in the future? Is it a benefit or not? Can you use electricity without paying money? It's a benefit, right? You can use electricity without paying money because you already paid. You already paid this year. So next year you can use electricity without paying money. We call this prepayment. Prepayment. Clear, everyone? Prepayment is where you pay for an expense even before you incur it. Before you use the electricity, you already paid for it. So in the future, you don't have to pay again. We say it's a prepayment. You're going to get the benefit in the future, even though you don't have to pay it again. But that's why we say it's a current asset. Another example, cash at bank. Guys, cash at bank means the money you have in the current account. Now guys, in a bank, you have something called current account, right? Usually businesses, they will open a current account to run their business. So in the current account, if you have money in your bank, you can withdraw it anytime, right? It's your money. So guys, it's a benefit for you. Whenever you want, you can use it. So that's why we say it's a current asset. Cash in hand. Cash in hand means the notes, the coins which you have in your hand. We say cash in hand. Okay? The notes and coins which you have in your hand, we call it, guys, the cash in hand. Clear? Understood, everyone? Are all clear with the examples? All okay? Can I continue? Okay. Now, guys, I'm going to teach your liability. Okay? Yes, Huda, wait. That's what I'm going to teach. Okay, Afra, I'm sorry. Okay. Now, guys, I'm going to teach you. Afra, is there anything which you want me to explain again? Guys, if I am fast, let me know. Okay? Okay, fine. Now, guys, liability. What is a liability? Same like asset, guys. You have the definition. If they ask you the definition, you just write it as a sentence. If they ask you the characteristic, then, guys, you have to write it in three lines, 3 points. Guys, see here, liability. We say liability is a present obligation arose as a result of a past transaction, an event, and which requires an outflow of economic benefits when settlement is made. Guys, liability, like assets, liability is divided into 3 characteristics. Guys, for example, now think you're the business. Okay, you're the business, so you don't have enough money. So what did you do yesterday? Because you didn't have enough money. Yes, Azha. Because you didn't have enough money, you go to the bank and ask for a loan. Okay, so guys, yesterday you took a loan from the bank. Now, guys, tell me, because you took a loan yesterday, do you have an obligation today? Yes or no? Right now, do you have an obligation? Obligation means a duty which you have to do. You can't avoid. Yes, right? Because you took a loan yesterday. Today, guys, you know that all of y'all here who took a loan yesterday, guys, y'all know today you have an obligation. Obligation is something, a duty which you cannot avoid because you took a loan yesterday. Guys, tell me, guys, because now, why do you have an obligation today? Because as a result of a past transaction. Because you went and took a loan yesterday. Because as a result of a past transaction, because you did something. Okay? Because you did something before, now you have an obligation. And guys, which requires an outflow of economic benefits. Guys, when you are settling the liability, okay? Guys, when you are settling the liability, what happens? Your benefits will go outside. So guys, tomorrow when you go and pay the loan, tomorrow when you go and pay the loan, what happens to your resources? Your resources is going to go outside the business. Guys, tell me, are they only talking about cash here? Are they only talking about when they say outflow of economic benefits, are they only telling about cash going outside? Or is it not only cash? Guys, economic benefits does not mean only cash. It can be anything. Let's say for example, the bank is telling, don't need to pay me cash. Without paying me cash, give me something else. So guys, if the bank is okay with it, you can give anything. Okay, so guys, some students, they misunderstand. They think economic benefits means cash. That's wrong. Not only cash. For example, let's say you took money from your friend. Yesterday, you took 1,000 rupees from your friend. So because it is a past transaction, it happened yesterday. No, because of that, today you all have an obligation. You all have a duty. Okay, you all have a duty. So because of the duty, what's the duty you have? You have to pay your friend because you already took yesterday. So now, guys, you're asking your friend, can I just give you my new bag? I have a new bag. That bag is 1,000 rupees. Can I give you without giving cash? Now, if your friend says, okay, it's okay, give me the bag, then guys, that is also an economic benefit. Why? Because you have to sacrifice your bag, okay, to settle the loan. Understood? So remember, economic benefit does not mean cash. It can be any resources. Clear? Okay, are you all clear, guys? So wait, we'll see if you have any doubt. The first class recording, some of y'all are asking whether I have the first class recording. Okay, guys, if you go to Sateha College YouTube channel, you will find the first class recording, guys. Just go to the playlist under accounting section. You can find the first class recording. Okay, so yeah, you can go like this. Wait. Okay, you go to the playlist. If you go to O-level accounting, okay, this is O-level business studies. If you go to O-level accounting, guys, you all can find the first class recording here. Here you can find. Okay, so some of y'all were asking. That's why I just wanted to let you all know. Okay. So Azhar, that's what you call as liability. Liability is something you have an obligation because of a past transaction. And you know that when you settle it in the future, there will be outflow outflow of benefits. Guys, when you're settling, your benefits will go outside. Everyone here, please now itself put it in your head. What is a liability? It is a present obligation. Present obligation means today you have a duty. You cannot avoid it. Now, because of that, it is why do you have an obligation? Because of a past transaction. Because yesterday you went and took a loan. You have a liability today. And you know that in the future, when you're going to settle it, there will be an outflow of economic benefits. So when you're explaining liability, the one which is in red color, guys, you all have to put it in the definition. If not, you all won't get the full marks to write what is a liability. Okay? How can I join your class? Guys, my classes will be on Thursdays. Okay, the usual classes will be on Thursdays, 4 p.m. to 6 p.m. 4 p.m. to 6 p.m. Okay, so if you want to, the monthly fees will be 1,200. It will be fully online. Okay, it will be like a fast track program, fully online. 4 p.m. to 6 p.m. And if you all want to contact, I'll give a number. Okay, just write it down so that if you all want to contact, you all can contact that number and make the payment. Okay, wait. Okay, I'll send it through here. I'm going to start from the beginning, guys. Yes, I will be covering both. This is for 2022 or 2023 O-level students. Okay, guys, it is for 2022 and 2023 O-level students. I will be covering both grade 10 and 11. Okay, before your O-levels, 2022 O-levels, I will be covering both grade 10 and 11 accounting. Okay. Just give me 1 minute. I'll write the number there because some of you all are asking me before I continue so that you all can note it down. Okay, I'll send it to the chat box. Just give me 1 minute. Yeah. So guys, to this number, you all can put a message and get the details. Okay. If you want to join the class, your class will be on Thursdays. Yes, from next week. From next week, Thursday, 4 p.m. to 6 p.m. Okay. Oh, wait, I missed another number, right? Wait. That's not the correct one. Wait a minute. That's what I was wondering. There are only 9 numbers. Now, okay, right? Yeah, and in the future, I might increase the class time, okay? In the future, guys, I might increase the class time just to cover the syllabus, okay? I hope I cleared your doubts. So this is the number, okay? This is the number. Fine. Now, guys, let's continue. The business, by the way, guys, the business studies, yeah, 2023 or 2022 O-level students, both of y'all can join, okay? Yeah, from next week, y'all can pay and join if you want, okay? First of all, I'll finish grade 10, then I'll start grade 11. Guys, no use of me starting doing grade 11 only. So that's why I do as a fast track program. This is my 5th batch. Okay, so I have done already 4 badges like this where I do fast track program. I just start from the basics of grade 10 and then I do grade 11. And some of you all are asking about business studies. Guys, business studies, if you go to our YouTube channel, business studies recordings are here. You all can watch business studies. For accounting, you all can join the fast track program. Okay, okay, so fine. The YouTube channel name is Sateha College. Okay, so guys, let's continue. Okay, if not, we might not have time, guys. I'm scared again there will be a power cut. So I have to finish this chapter today. Okay, so guys, see here, liability, we say it's a present obligation as a result of a past transaction transaction or event, and there will be an outflow of economic benefits when you're settling the liability. Now, for example, now guys, if you want, guys at home, just read this and see. This is an example which is given. Okay, now what happens is when you are taking a loan, let's say last year you took a loan, in 2019 you took a loan. Because you took a loan in 2019, now you have an obligation. Obligation is a duty you cannot avoid. And then guys, you have to pay in the future. Now, when you have to settle money in the future, what happens? Your benefits goes out. Remember, asset, your benefit comes in. Liability, your benefit goes out. Okay, guys, just to make it interesting, shall I give you questions? Can you all take your books and guys write this question and send me the answer. The first question I want you to write is, okay, what is the similarity? I think this was a past paper question, if I'm not wrong. Okay, what is the similarity between asset and liability? And the second question I want you to write is, what is the difference between asset and liability? Write it down and get the answer. 2 minutes, okay, be quick. You can send it through the chat box. Just send the answer. Okay, let's see your answers. Okay, good job, guys. Okay, for the students who didn't join the first session, okay, for the students who didn't join the first session, please make sure you all go and watch the recording, okay? If not, you all will find it difficult because that's the basic, guys. You all need to know. So make sure you all go and watch the recording. It's there in the YouTube channel, okay? Don't miss it. So that then you will be clear with the first unit of accounting. Okay. Okay. So, no, don't do third question. Only 1 and 2. I told you to do only 1 and 2. Okay. Now see here. What is the similarity between asset and liability? You can easily get it through the definition what we studied. Guys, when it comes to asset and liability, the similarity is as a result of a past transaction and event. Both arose, okay? Both arose as a result of a past transaction. Okay, so that is the similarity. See whether you all have written like this. Okay. Both arose as a result of a past transaction or event. That is the similarity, guys, between asset and liability. Now, what is the difference between asset and liability? Okay, the difference between asset and liability, guys, the economic benefits. You can talk about economic benefits. If it's an asset, is it outflow or inflow of benefits? Assets, soon, send me the answer. Outflow or inflow? It's inflow. If it is liability, economic benefits will outflow. Good job, guys. Asset, economic benefits will inflow to the business, while liabilities, guys, economic benefits will outflow. Guys, outflow of economic benefits, inflow of economic benefits. Okay, so guys, see here, these are the things you need to write. Okay, so now let's continue where we stop. Now guys, like assets, even liabilities are divided into two: non-current liability and current liability. Okay, like assets, non no for in my class I usually give tute. Okay, you all can take a printout of the tute, and you all have to have a CR book, not the max book. Okay, not that one, the normal CR book, the single rule. You all have to have a single rule CR book. Don't take small books. Okay, you're doing accounts now, so you need CR book. Fine. Now guys, liabilities are divided into two: non-current and current liability. Okay, now guys, non-current liability. Okay, so can you show me the answer for the second question? Yes, quickly write it down. Quickly write it down. Okay, guys, now let's continue. Now, guys, liabilities are divided into two. Okay. Yes, Raihan, I actually explained. Okay. So now see here, liabilities are divided into two: current and non-current liability. Okay. For the students who are asking again, guys, you just have to put a WhatsApp message to this number. You will get all the details about the class. Okay. So guys, non-current liabilities, we have to settle. Now, when you settle these liabilities, it will take more than 1 year. Now, guys, when you go to the bank and ask for a loan, bank will give a loan, right? So the loan the bank will give, usually, guys, they will tell you to settle it for 5 years, 10 years. If it's a very big amount, 20 years. So we call them non-current liability. Non-current liability, guys, these are liabilities which will take more than one financial year. Financial year is 12 months. It will take more than 12 months to make the settlement. Okay, you cannot settle within 12 months, guys. It might take more than 12 months when you want to settle. Okay. So now see here, example is bank loan. Bank loan is an example for non-current liability. What is a bank loan? Guys, bank loan is where when you do not have enough money, you go to the bank. When you do not have enough money, you go to the bank and ask for a loan. I have seen students, they get confused with bank loan and this bank. Guys, cash in bank means you have enough money in the current account. We say cash at bank. Now, here bank loan means you do not have money. That's why you go and ask for a loan from the bank. Okay? See here, you do not have enough money, so you go to the bank and ask for a loan. We call it bank loan. Understood the difference? Cash at bank means you have money in the bank. We call it cash at bank. Bank loan is where you do not have money. You go to the bank and guys, you ask for a loan. Okay, so now guys, current liability, these are short-term loans. This is where guys, you will take less than or within 1 year to make the settlement. Okay, these are liabilities where you will settle it within 1 year, less than 12 months. When you want to settle it, guys, it will take less than 12 months to make the settlement. We call it What? We call it current liability. Now, most of y'all were asking me, Miss, then who is a creditor? You taught us debtor. Who is a creditor? Guys, see here. Under current liability, we will study who is a creditor. Now, guys, creditor is someone you have purchased. You have purchased. What purchase you have made? You have made a credit purchase. Guys, whatever I'm writing, if you feel like it's additional notes, write it down. That's how you study. Okay, now guys, you're making a credit purchase. What's a credit purchase? Credit purchase is where, guys, you're telling the supplier, you now, let's say you're a stationery business. Now, if you're a stationery business, first of all, you need to buy, then only you can sell. Now you go to a supplier, maybe you go to PETA and you buy a lot of stationery, but you tell the supplier, listen, I don't have money to pay you now. I'll pay you later. You call this, guys, credit purchase. Now, before it was credit sales. Guys, can you write this down? Can you write this down? When you have a credit, when you make a credit sales to customer, you create whom? Debtor. Okay, when you make a credit sales to customer, you create debtor. Write it down, guys. Now, when you make a credit purchase to whom? To supplier. Supplier is the person who will supply you goods. Whom do you create? Creditor. Now, guys, you told the PETA supplier, you told him, listen, I'll pay you the money later. Now, guys, see, it is satisfying the definition of liability. Your PETA supplier will tell, listen, I am giving you these stationeries, but you have to pay me within 1 month. Okay, I am giving you stationeries, you have to pay me within 1 month, the money. So now, guys, you are liable. You have a liability towards the PETA supplier because within 1 month, you have to settle the money because you made a purchase. Okay, you made a credit purchase. Okay, so remember, when you make a credit sales to a customer, you create debtor. Credit sales is where you sell goods and ask your customer will pay you the money later. You create debtor. Guys, debtor is an asset because you are going to get benefits in the future. But opposite of that is creditor. This is where you purchase goods. And you tell the supplier, I will pay you the money later. Because of that, now you have a liability. You have a liability because you have to pay the money, right? So now, guys, that will create what? Okay, that will create a person called creditor. We call him what? We call him creditor. Most of the time, guys, students, they get confused with debtor and creditor. I want you all to make sure that you all have no confusion. Guys, write it down somewhere. When you make a credit sale to a customer, you will create debtor. Debtor is a current asset. So I want you to write it down like this. Okay? So write it down like this. When you make a credit sales to whom? To customer. You create whom? You create debtor. Who is a debtor? Debtor is a current asset. Current asset. Okay. Now write the opposite. What is it? Right here. When you make a credit purchase, before it was a credit sale. Now, guys, right. When you make a credit purchase to whom? To the supplier. Whom do you create? You create creditor. Creditor. Creditor is a current liability. Now are you all clear? The students who asked me, now are you all clear? It's a current liability. Write it down, guys. Write this down. Okay? Exactly, Yadurshini. What is meant by trade creditor? Trade creditor is the creditor. But that's what I was telling all this time, Huda. Now you have gone and bought goods. You have now, if you're let's say you're selling pens, dear. Now what you do is you go to PETA, buy pens for less price and sell it for a higher price. So when you go to PETA and buy pens, you don't have money. You want to buy 1,000 pens. You tell the supplier, PETA supplier, listen, PETA supplier, I won't pay you money. I'll pay you later. But you give me the goods. Now you have a liability towards the PETA supply, right? You have to pay the money later. So that's why it's a current liability. Guys, write this down quickly. Can I continue? Okay. No, now it's like this, Afra. No, we owe money to creditor. Debtor is the person who owe money to us. They didn't borrow money, dear. They didn't borrow because you made a sales. No, you have a debtor. Here, there is nothing where you borrow the money. You didn't borrow money. Your debtor didn't borrow money. You made a sales. Because you made a sales to the debtor should pay you money. Here, the debtor never came and asked you money. The debtor asked you for the goods. Got it? Okay. See here, because you made a credit sales to customer, you create a debtor. Okay. Now, guys, you can sell. You can sell goods on credit. You can sell goods on cash. That means, guys, when you sell goods, you can ask the customer to pay you money. Or the customer can tell, I will pay you money later. Now, credit sales is where your customer pays you money later. So when there is a customer who will pay you money later, that customer is called a debtor. A debtor. Clear? I hope now you all are okay with it. Now, guys, now let's continue. Better you write economic benefits will inflow and outflow, dear. Better you write like that. That's easy also, right? Now, guys, the other one, bank overdraft. Now, bank overdraft is where, guys, you have a negative bank balance. Now, when you had money in the bank, we call it cash at bank. When you had money in your bank current account, what did you call it? You call it, guys, cash at bank. When you have money in your current account. Okay. Now, guys, if you are a current account holder, let's say you have a very good relationship with the bank. Okay. That means, guys, you are a very loyal customer to the bank. Now, the bank will give so many privilege. Okay. If you are a loyal customer. Now, let's say, for example, you have money in your bank account. You have 10,000 rupees in your bank account. Now tell me guys, is it an asset or a liability? Soon tell me. You have 10,000 rupees in your bank account. 10,000 rupees as current asset or current liability. 10,000 rupees in your bank account. Very good. It's a current asset. It's a current asset, guys. If you have 10,000 rupees in your bank account, it's a current asset. Now you call the bank. You call the bank and tell, bank, listen, I have to pay my creditor. Now, creditor, you have to pay money, right? Because creditor is a liability. Now you tell the bank, bank, listen, I have to pay my creditor 12,000 rupees. Can you pay it? Guys, is it possible? There is only 10,000 in the bank, but you're asking the bank to pay 12,000. You have only 10,000 in the bank. Okay, but you are asking the bank to pay 12,000. Then the bank will say, no, we can't do that. We can maximum pay only 10,000. But let's say, guys, you're a loyal customer. Loyal customer means, guys, you have done a lot of transactions before with the bank. We call you're a loyal customer. Now, guys, if you are a loyal customer, the bank will say, okay, I will pay the money, 12,000 to whom? To the creditor. Now, guys, when the bank pays 12,000 to the creditor, what will be your bank balance after the payment? How much will be your bank balance after the payment of 12,000? It's a negative 2,000, right? You will have a negative 2,000, guys. You will have a negative 2,000. Now, guys, when you have a negative bank balance, guys, who should pay money? Should the bank pay you the money or you should pay the bank? Should you pay money or the bank should pay you money? Who should pay money? Yeah, we should pay money, right? We should pay money to the bank now because we have a negative bank balance. Now, guys, this negative bank balance is what we call as a bank overdraft. This negative bank balance only, guys, we call it as a bank overdraft. Can you all write this example down? Okay, first of all, let's say at the starting date, you had 10,000 rupees balance in your bank account. So when you had 10,000 rupees balance in your bank account, it was an asset. Why? Because we studied here, see, cash at bank is an asset, current asset. Okay. After that, guys, during the month, you say to the bank to issue money to whom? To creditor. Issue 12,000 check to whom? To the creditor. So after you issue 12,000 to the creditor, now you don't have a positive bank balance. You have a negative bank balance. Guys, when you have a negative bank balance, we call it bank overdraft. Bank overdraft is where now we have to pay the money to the bank. Okay? We have to pay the money to the bank. Before, bank had to pay us. Now we have to pay the money to the bank. Okay? Negative means now this was a positive balance. But after you had issued check to the creditor, your balance became negative. Negative means it's not positive. How do I tell that? Negative is where, guys, we have to pay money to the bank. If we have to pay, guys, we are liable. That is why we say it's a current liability. If we have to pay money, we are liable to the bank. If we are liable to the bank, that is why we say it's a current liability. Writing, are you all done writing this example? How should we show the negative? Yeah, you show it as bracket. If it is positive, you just show it as positive. If it's negative, you usually show it in brackets. Can I continue, guys? I haven't started that. Next, I'm going to explain that. Okay? Guys, don't worry, okay? Because these first few classes, you will find a lot of new terms. Because this is the first time you're starting to study, right? That's normal, okay? In the first two classes, everything will be new terms. You will find it difficult, but don't worry. Guys, if you all are finding it difficult, just make sure you go and watch this recording again. I'll send the link to the groups. Make sure you watch it again. Then guys, you can make a short note and try to understand better. Because the first chapter is difficult when you study for the first time, because this is the first time you're learning new terms. Okay, so that's why you might find it difficult. Don't worry. Once you get used to it, this chapter will be the most easiest chapter. Okay? Okay, now go to the next one. Accrued expenses. Accrued expense. Can you write another term? Accrued expense. Another term is expense payable. Expense payable. Now, what is accrued expense? Guys, for example, let's say you have taken a building for rent. You don't have your own building, but now you need to do a business. So what you do is you go and ask someone and take a building for rent. Okay. So when you take a building for rent, you have to pay rent, right? Rent, you have to pay monthly rent. So what happened is you have nicely used the building, but still you didn't pay rent. Okay. You have already used the building for the current year, but you still didn't pay rent. What do you call that? Let's say 2,000 rent, you haven't still paid yet. We call it rent payable. Rent payable. Or we say another term, accrued rent. Accrued rent. What does this mean? Guys, this means you haven't paid yet. You have already used the building and still you didn't pay, guys. Are you liable? Yes or no? Are you liable towards the building owner? Should you pay him? Yes or no? You're liable, right? Because of that only, you say it's a current liability. Okay? When you make the payment, guys, until you make the payment, it's a liability towards us because we have already used the building. So that's why we say it's a current liability. Usually, guys, we have to settle it within 1 year. Okay? Okay? So now, guys, next one. What is the next one? Shall I continue or you all have any doubts? Shall I continue or have any doubts? Ask me if you have any doubts. Then after you make the payment, it's not a liability, dear. Only until you make the payment, it's liability. Once you are done with the payment, it's not a liability anymore. So because you didn't pay only, we say it's a liability. Okay. Now, guys, go to the next one. Income received in advance. Income received in advance is where, guys, even before you gave the service, you already received the money. Now, for example, let's assume you all are teachers. Okay. So y'all are doing classes. Y'all are doing classes. Maybe let's say you're teaching a subject. Okay. So now what happens is you have to receive income, right, from your students, because once you finish teaching, you have to receive monthly income from the students. They have to pay you the fees. Okay. But what happens is there is one student. This student has paid you even for the next year. Okay. Have you taught for the next year? Guys, have you taught the student for the next year? Have you taught the student for the next year? Not yet, right? You haven't taught the students for the next year. But have you already received the money for the next year? Have you received the money? Have you received the money? Now, guys, I told you, y'all are the teachers. Okay? So you have a student who paid the money even for the next year. You haven't taught next year, but you have already received the money for the next year. Now, guys, tell me. First of all, you all understood the situation, or should I explain one more time? You all are doing a business. Okay? Okay, as I did for my school van uncle. That's what. Now see here. You all are doing a business. What is your business? Teaching. Now, there is a student who already paid you the money even for the next year. But you still didn't teach for the next year, no? Now, guys, tell me, do you have an obligation to teach for that student for the next year? Do you have a duty? Yes or no? Yes, guys, you have an obligation because you already received the money. Even though you still didn't give the service, you already received the money. Because of that, you are now liable towards the student. You are now liable towards the student because you still didn't teach her. Even though you didn't give the service, you already received the income. So we call it income received in advance. Guys, because of this, now you have an obligation towards the student. Okay? Yeah, now it's compulsory for you to teach the student for the next year. Guys, what about other students? Is it compulsory for you to teach them for the next year? Other students, except for that one. Is it compulsory to teach other students also? No, they didn't pay the money. But only that particular student, no matter what happens, you have a compulsory, you have an obligation to teach for that student for the next year. So that's why we say it's a liability. It's a liability. Understood? Accrued expense is where you have to, it's expense payable. You have already used the particular service, but you didn't pay the money. Income received in advance is where you already received the money, even though you didn't provide the service. You received the money before you provided the service. Okay? Understood? No, why we say past transaction, dear? Past transaction is because it happened something in the past. Because the student paid me for the next year in the past. That is why I have an obligation towards her that I should teach her in the future. Are you clear, Yadurshini? Accrued electricity bill is Lena, like this. You have already used the electricity, but you still didn't pay. You still didn't pay electricity. So we say electricity payable or accrued electricity. Understood? It's also a current liability, dear. Accrued expense means, guys, you have already got the service but still didn't pay the money. Example, you nicely used electricity but still you didn't pay the bill. Now you are liable to pay the bill. Okay? Now, guys, we are done with 2, assets and liability. We have 3 more to go. Now we'll start equity. Before that, ask me questions, 2 minutes. Ask me questions. Okay. Teacher, then just electricity bill is an expense, Lina. Electricity is an expense. But electricity not yet paid is a liability. Yes, Asha, for all levels, only bank loan comes under non-current liability, okay? Trade creditor is where you have purchased goods but didn't pay the money late. But you didn't pay the money yet. You have already purchased goods but didn't pay the money. Yes, Ilma, that's correct. But when they just say bank loan, Ilma, it's non-current liability. Okay. In the exam, if they just say bank loan, it's non-current liability. Yes, Azha. Okay, now guys, we'll go to equity. Now, this is very, very important. Okay, because if you will, even chapter 2, you need this. Now, let's say, guys, you are starting a business. Always, guys, when you're doing accounts, you should always think you're the business. You're not the customer. Even last class, I told y'all, you should always assume you're the business. Okay? Keep that in mind. Now, guys, let's say you're starting a business. Now, to start a business, let's say you need a building. Building is what element, guys? Building is what element? It's an asset, right? Yes, that's correct. Now, guys, building is an asset. Okay. To start a business, let's say you need a building. Now, you need to buy a building. Okay. Now, to buy a building, you need 10 million rupees. Assume, okay, it's more than that. Let's assume it's 10 million. Now, guys, you as the owner, you only have to, let's say 4 million. You are the owner. You only have 4 million. What will you do to take the other 6 million? Can you give suggestions? How will you get the other 6 million? From where you can take? Yes? Very good. For a bank loan, you go to the bank and ask for a loan. Okay? You go to the bank, ask for a loan. Okay? Now, guys, bank loan is what element? Bank loan is what element? Liability, right? Bank loan is a liability. Now, guys, see here. See how I'm going to explain you what does equity means. Now, you need to start a business. Guys, to start a business, you need 10 million rupees. Why? Then only you can buy the building. Because building is 10 million rupees. So, to start a business, you need 10 million. Why? So that you can buy the building. Okay? Now, guys, what you do is, you as the owner only have 4 million in your hand. You're the owner, guys. You only have how much? 4 million. So you go to the bank and ask for a loan. How much do you ask? You ask 6 million loan. Then only know you can buy the building, guys. So you ask how much loan? 6 million loan. Okay? Now, when you ask 6 million loan, you know loan is a liability, while building is an asset. Now, we say, guys, what is equity? The value of assets that belongs to the owner. Guys, tell me, out of this 10 million building, how much does the owner own? How much is it belonging to the owner? Is all 10 million worth of building belonging to the owner? No, everything is not belonging to the owner. Why? Because he took 6 million loan. Guys, this 6 million loan which he took is related to the bank. So he only invested 4 million. So guys, we say what is an asset? Sorry, what is an equity? We say equity is the value of asset that belongs to the owner. Now, guys, our asset is 10 million. Out of that 10 million, how much is it owned by the owner? Only 4 million. So we say this 4 million is whom? This 4 million is what we call as equity. So remember, the value of asset which belongs to the owner is what we call as equity. Are you all clear, guys? Are you all clear? Okay, I'll repeat it again. See here, you started a business. Okay, to start a business, you needed a building. So to buy a building, you have only 4 million in your hand. So you go to the bank and ask for a 6 million loan, so that your bank gives you a 6 million loan. Now you know loan is a liability. Now what does equity means? Equity, we say it is the value of asset. Asset is 10 million, but that only belongs to the owner. Guys, all the asset does not belong to the owner, because out of this 10 million asset, 6 million we took a loan. So what is the value of asset that belongs to the owner only? 4 million. So that is what we call as equity. Azhar, you clear now, dear? Okay. So easy way to remember, guys. Just remember this example. You can get the definition as well. The value of assets, 10 million, that belongs to the owner, 4 million. So 4 million is what we call as equity. See, 10 million minus 6 million gives you 4 million. Okay. So guys, this is how you do. Clear? Now guys, under equity, we are going to study something important. Now, equity changes due to 4 items. Equity increases due to income, due to additional capital. I'll explain you what are they. Equity reduces due to expense or due to drawings. Now guys, you know what's an income, right? If you start a stationery business, the money, not only the money, whatever you earn by doing the stationery business is the income for you. Okay? What is additional capital? What is additional capital? Guys, additional capital is where the owner brings money again from his house. For example, first of all, owner put how much? Owner put 4 million, right? After one year, owner comes and invests another 1 million. Now, totally how much has owner invested? At the start, he invested 4 million. Now, guys, he comes and invests another 1 million. So then, guys, we call this additional capital. What do you call this, guys? We call this additional capital. Additional capital is something the owner brings after the first time capital. First, hear me? Can you all hear me? Okay. So, sorry guys, sorry. Power cut. Power cut. I hope the connection is good now. Okay, if it's lagging, let me know. If it's lagging, let me know. Okay, so now guys, see here, additional capital is where owner is bringing additionally after the first time initial capital. Initially, he bought 4 million. No, guys, after he brings 4 million, if he brings something again, we call it additional capital. We call it what? Additional capital. Miss, is it profit will increase equity? Yes, Yadurshini. I'll tell you that as well. Now, guys, see here, income and additional capital will increase your equity. Okay. Now, guys, see here, due to an income income, your owner's equity will increase because owner started the business to earn an income. No, guys, that's why he started. No, he didn't just start. No, he started a stationery business so that he earn income through stationery, selling stationeries. Okay, so because of that, it will increase your equity. While guys, expenses and drawings, okay, expenses and drawings, they reduces equity. Now guys, if you start a business, you can earn income by selling your stationery and stuff, right? Will you incur any cost to sell the stationery? What do you think? Yes or no? To sell the stationery, will you incur any cost? Or you can just only get income? Are you just going to get income, or do you have to spend something to sell it? Do you have to spend, or you can just earn income? You have to spend, right? What you have to spend is what we call as expenses. Guys, expense is something you have to incur to earn the income. In order to get the income, you have to spend, then only you can get it. You can't just get income, guys. For example, if you start a stationery business, to sell the stationery, first of all, you should buy it. No, guys, when you buy, it's an expense for you. Okay, you can't just get it for free, no, guys. So you have to buy it. So that's an expense for you. Okay, so because of that, your equity will decrease. Your equity will decrease due to an expense. And the other one, what is it? Drawings. What does drawings means? Drawings means, guys, your owner is taking something from the business. It can be cash, it can be goods. This is where, guys, your owner comes, and now owner is coming to the business and taking money. Or maybe he's taking something for his personal use. Let's say he's taking some stationeries for his daughter. We call it, guys, drawings. When the owner takes something for his personal use, what do you call it? We call it drawings. Guys, drawings also reduces your equity. Okay, so remember, income, additional capital increases equity. Okay, and then expense and drawings reduces equity. Guys, what about profit? Profit, will it increase your equity or will it reduce your equity? Yes, Azhar. It will increase your equity, right? Profit. How to calculate profit? How to calculate profit? Can someone tell me? This is something basic, anyone will know. How to calculate profit? Yes, profit is, guys, income minus expense. Income minus expense is what you call as profit. Guys, when you have a profit, will your income be higher than expense or expense be higher than income? If you want to say something as profit, which is higher, income or expense? Income, right? If something is to be told as profit, guys, your income should be higher than your expense, then only it becomes a profit. Guys, then loss, if it's a loss, what is higher? Now, example for profit is 10,000 minus 8,000. You have a profit of 2,000. If it's a loss, guys, your income, your expense will be higher than your income. Example, 7,000 is your income, but your expense is 10,000. Then we call it a loss. It's a loss. Guys, profits increases your equity, while your losses will reduce your equity. Profits will increase your equity, while losses is going to reduce your equity. So guys, keep in mind, if y'all want, y'all can write something here additionally. What is it? Y'all can say here, another thing which will increase your equity, you can say profit. And the other thing which will reduce your equity, you can say loss. Okay. One thing which will increase your equity, you can say it's profit. And the other thing which will reduce your equity, you can say it's a loss. Guys, this is very, very important. Why? Because when you go to chapter 2, you will do accounting equation. For that also, you need this. Please don't forget. Income, additional capital, profit increases equity. Expense, drawings, and losses will reduce your equity. Okay, guys, are you clear? Confirm, please. Are you clear? Oh my God, here is so sweating. Okay. So, guys, fine. Let's do like this, guys. See here. Next Monday is your school starting. As a losses where dear your expense is higher, you have spent more than your income. When your expense is higher than your income, dear, it will become a loss for you. So it will reduce the equity. Guys, your schools are starting on Monday. Are you fine? No, I wanted to put another class and finish the last part because here I have to explain one by one. That's why. Okay. Yakub, it's like this, Yakub. If the owner is taking too much drawings, I mean, the business can shut down because you don't have money and stuff. Okay. If your owner is taking too much drawings, it's not like this. Okay, drawings and expense is not the same. Drawings is where the owner is taking money from his own business. Expense is something you're incurring for business purpose. Now, drawings is owner taking money for his personal use, for his own use. Expense is something owner is incurring for business. I mean, the business is spending on the day-to-day expenses. Understood the difference? You get what I'm saying? Drawings is where owner is taking money for his personal use. It can be money, it can be goods. Now, expense is something you spend on day-to-day business activities, expenses. Okay, guys. We'll stop it here. Guys, if you all want to continue my classes, you all can get the details from this by sending a message to this number. Okay, guys? Your classes will be on Thursdays, okay, from 4 to 6 p.m. 4 to 6 p.m. Okay, we will be starting from grade 10 beginning and finish grade 11. So you will be covering all the syllabus. Okay, not only grade 11, not only grade 10. First of all, grade 10, then we'll start grade 11. So guys, we'll stop it here. Okay, guys, take care. Thank you for joining for the free seminar. Abdurrahman, I'll consider that. Okay. The thing is, yeah, I'll let you know. The thing is, if there is no school, Abdurrahman, I could have kept another one before Thursday's class. That's what I'm thinking. I'll let you all know. Okay, guys, take care. I hope you all got benefited through the free sessions.